Today we have with us Harsh Bagla. Welcome, Harsh. Startup valuation can be complex, okay? What is your take on that? That how does one navigate that or judge whether the valuation is right?
Startups in today's time has become mainstream because thanks to a lot of social media and obviously the advent, if I have to say, of Shark Tank. Valuation in startups, it's almost a mystery over here.
What is a pre-seed, seed and series A? What does that mean?
The highest risk is at the seed stage. आपने सुना होगा कि 100x, 200x, 300x of money जो seed stage में बनाते हैं because they're taking the risk at that point in time.
Tell us about any one proposal that you rejected and what was the reason behind it?
So one of the companies came in, decent business model, but when I asked them about their valuation, they had been previously funded from two sharks.
Are there any red flags that tell you that this startup or this company is like not a good investment?
Biggest red flag is someone comes and says, we are the next Uber in this industry.
Say you are saying कि एक दो में मत करो and you should have at least 20 companies.
Correct. General thumb rule is, अगर आप 20 investment करते हो, 5 will go defunct, 10 will return your money, 2 or 1 will be blockbuster, which will be 200x.
Hi everyone, welcome to the season 2 of the Invest My Paisa podcast. Today we have with us Harsh Bagla, who is a New York-based CFA Charter holder and an MBA in finance, specializing in investment banking. So welcome, Harsh. And do give us a brief introduction about yourself and your career path till now.
Thank you. It's a pleasure to be here. So just a brief about, in my last 20 years, I have worked in the investment space for 10 years. First with a private equity firm where I was investing in steel, dish, hospitality space. Post that, moved with a single family office where I was managing a portfolio of 200 million. The family office had a portfolio size of $1 billion and primarily investing into public equities and convertible debt. Then went into my passion, which I think was training. So have been training for the last 10 years in Dubai and then in New York, right? Primarily, this is for sovereign wealth funds, investment banks, private equity players. So be the like of Citi, JP Morgan, BlackRock, right? So whenever an analyst joins them, I do kind of train them on understanding their job, understanding the market nuances, and so on, right? I'm also a VC investor, primarily into edtech, health tech. I do some agri-tech, and also right now I'm running a roll-up for my wife in the dental space where we acquire different practices. There we are. Pleasure to be here.
So what made you switch firstly from the family office thing to teaching?
I think for me, it was one balance of personal life versus professional life that was important. When I remember I was with a single family office, I was trading Japan. That was 4 a.m. Dubai time.
Wow.
Then trading India, 7 a.m. Dubai times. And then trading US that would start at 5 p.m. and finish at 1 a.m. So the only sound sleep I got was for 3 hours. And that was fun, but I don't think so. I wanted to continue doing that forever, right? So there we are. And I think I had a knack for teaching and I enjoyed interacting. It's young minds always attracted me more. So there we are. That's where I am. Yeah.
Startup valuations can be complex, okay? So how do you, what is your take on that? That how does one navigate that or judge whether the valuation is right, not right?
The startups in today's time has become mainstream because thanks to a lot of social media and obviously the advent, if I have to say, of Shark Tank. I think Shark Tank started December 21 or Jan 2022, right? But startups has been funded in India from I would say it has become mainstream investment from 2010, right? So there are many homegrown startups which are kind of many homegrown players who have been playing a role in this startup industry. Now, valuation in startups, it's almost a mystery over here There are various ways you can think about it. One of it is today, whatever you are investing in a startup, right? It has to be with a vision of 5 to 10 years into the future,
Makes
right?
sense,
So,
yeah.
for example, I got involved with a company that was
Hmm.
in agri space,
Hmm.
right? One of my students, now
Okay.
since you asked about my education as well.
Yeah.
So he was starting up
Huh.
and he came up and
Huh.
said, Harsh, I'm wanting to invest in it. There was an idea of financing farmers,
Okay.
right?
Huh.
Now, there's so many things that could go right or wrong, right? Eventually, what you have to do is understand, is there a business need that he was trying to solve? And if he was trying to solve that business need, how big that need becomes in the market. So, हम लोग एक टर्म यूज करते हैं जिसका नाम है टैम, total addressable market, right? Startup valuation is what you have to see is आपका TAM कितना बड़ा है, and can that TAM be expanded even further? That's the idea around it, right? Based on that, फिर उसका कितना market share आप ले सकते हो. Based on that, you can come up with a valuation, right? It's a tricky one. There are various metrics you can follow, which if you want, we can discuss it. But that's how you want to first think about it. What is the problem you're solving? The agri-tech one was solving the problem of farmers don't get easy access to capital, and jab milta hai, it is too costly for them. Zamindars, I'm sure you have heard about them, where they are charging 18 to 30% in terms of interest. Government has come up with various schemes, but it has not yet reached the farmers in the scale the government wants to. That's where all of these companies are coming in. So that was a real problem. Humne suna hai, we never understood how to address it. He came up, I resonated with that view, and that's when you invest. Second, you need to be very clear about the person you're dealing with, right? It's a people bet, right? There's no business which can go on without the right founder. So it could be a rubbish business, but if the founder is right, he will pivot and get you in the right path, right? So understanding the person, that's the valuation startup mein karna hai. I cannot put a number ki this company is good at 5 crores, 10 crores, 30 crores. I wish I knew, right? Right?
Yeah.
Because initially doesn't matter. Because
Okay.
you are playing a long-term game. Like I think Zomato, when it first did its startup round, its valuation was 10 crores, right? At that point in time, even 10 crores was too high.
Too high.
No one knows whether internet was about to boom. अपने पास इंडिया में तो
Mobile apps were there.
mobile apps were just
हाँ,
starting, right? So it's very difficult to say 10 crores is right or wrong. But they were solving a need of food delivery. Today it is what 2 lakh crore ki company. So you have to have a longer term view. It takes time to bake that. 15 years is what Zomato is successful now, right?
Yeah. It's been 15 years.
Yeah, exactly. Yeah.
So, do you think that there's a lot less startups coming up in the rural space? Like you spoke about the agri-tech company. It's a big risk that you're taking tech in the rural area compared to a Zomato, which is doing like urban tech.
True, there is, but you'll be amazed because when I invested in that company, I went in, I met the farmers, I met the middlemen, I met where they were going and buying their the local kirana shops, जहाँ पे उनको grains खरीदना है. Everything had tech enabled over there, right? And they again agreed. मैं जहाँ गया था, that was Pune. That is a bit more advanced in kind of adopting it. There are regions where it might not be more advanced. So there is a mix. They need comfort. Farmers को सिर्फ चाहिए कि when you are coming in, you are not going to dupe them. So it is trust. So you start off small with them. You can't go shebang, big shebang. Just start up small, but they are good to adapt. Today, those farmers are taking line of credits from my company, right? A credit card kind of a line of credit, they're saying. So who would have thought farmers are availing that? But they are from our company, right? So it's the general trust over time that you need to build. Yeah.
Okay. It seems you did your due diligence, that you went there, you met the stakeholders, and then took a call whether to invest or not.
Yes.
So anyone investing should, maybe more than the valuation, focus more on the due diligence, maybe.
Always have to, because like I said, valuation number is very, very fuzzy right now, right? No one knows what's the right valuation. So you have to do it. But I also understand कि हर एक के पास उतना time नहीं होता है. So there are various avenues where you can still be part of this growth and not go in and meet personally, right? So let me paint this. So if you want to start investing in this space, there are 2 or 3 ways. One which I do, which I love doing, is go talk to the founders, go meet the team. That's a lot of effort that one has to do, and day-to-day life में हर एक के पास नहीं होता था time. Second, what you can do is you can participate through funds. So there are funds who will possibly take your money. There are funds who will possibly create that vehicle for you. They will do the due diligence. They will do all the vetting. All you need to do is attach yourself with the funds, and you can get exposure to that. But at the same time, usme bhi you have to evaluate the fund, right? But at least you're not evaluating every investment. You're evaluating one fund at that point in time. That's a good take for anyone who wants to balance time versus investment. Yeah.
Before we deep dive, let's understand the difference. Ki, there are 3 kinds of investing happening in the startup space: angel investing, venture capitalists, and private equity.
Yeah.
Okay. So how are these 3 different, and what does one opt for at which stage?
Okay. So there's a very fuzzy line between angel versus venture versus VC. But if I have to kind of cut these 3 in these 3 buckets, angels are where you just have an idea, you have not yet made a product, and you go to family, friends, or maybe anyone who's very close to you to fund your initial idea. The moment you have a product market fit, कि हाँ ये product hopefully चलेगा, is when you go ahead and talk to VC players, right? Because once the product is ready, they know there's some seriousness which has been put in, is when VC kind of jumps in. So angel rounds are usually what? $100,000, $200,000. That's the maximum you will see on angel round. When you see VCs, a typical investment would be $1 to $2 million initially as a funding.
Okay.
And when you see private equity is when they say, ये product सही है, VC has invested, they've got it to a certain growth, but it needs scale.
Okay.
When scale is supposedly going to come in, you need more capital. That's where private equity comes in. That's the 3 stages that you're investing in. Obviously, the highest risk is at the seed stage, right?
Yeah.
In these 3 things, the lowest risk is at the private equity. So easily the returns that you will make is higher at the seed stage. So आपने सुना होगा कि 100x, 200x, 300x of money जो seed stage में बनाते हैं, because they're taking the risk at that point in time. Versus private equity, you will usually make what? 3-4x of your money, right? That's all you will make at that time. Now, that's not less, but that's the difference in terms of returns. That's because of risk return profile.
And also the valuation, the kind of money they are dealing with would be higher at the private equity.
Much higher, right? So, like I said, एक thumb rule मैं usually follow करता हूँ कि every fundraise, usually you sell 15% of your company, 15 to 20% of your company. So, अगर आप VC stage में you're raising $1 million, which is 8 crore, right? That is worth 20% of your company. That means your firm is valued at 40 CR. Versus when you're looking at a private equity stage, उनका minimum check size $100 million का होता है. That means the firm is valued at $500,000, which is 4,000 crore. So obviously the size is very different at the private equity stage versus a VC stage.
For the understanding of people who don't understand, what is a pre-seed, seed, and Series A? What does that mean? Like,
it's just different rounds of funding, right? So typical thumb rule says the moment you are in angel investing, that's pre-seed / seed stage.
Okay.
right? If you're in VC, that usually might start at the seed stage, goes up to series A, B, C, D. You can keep going on in terms of alphabets as much as you would want to, right? And post that is when you might have private equity players who might come in, right? Now, what are these rounds? It's simple. As you are raising new money, highly likely it would be at a higher valuation. Isliye round gets changed from A to B, right? Or B to C and so on. Now, ऐसा कोई rule नहीं है, but typically people want to think and follow that. That Series A is usually at a $50 million valuation. Series Bs are usually at a $150 million valuation. Series C is at $250 to $300 million valuation. So you can think of A, B, C as simply saying, agar C aa gaya, that means approximately firm ka valuation is $250 million. That's how it gets bifurcated. But there's no such rule. But with the investor community, that's how we start thinking about A, B, and C.
Okay, you're thinking about the valuation, and pre-seed is mostly idea stage.
Almost at the idea, angel stage, right? Pre-seed. So, which is, I don't even know whether the product will work. That's where pre-seed. Most of the angel money comes in at that stage.
Okay. Okay. Tell me, Savi, how does one exit? Say, suppose I've put in money as an angel investor or as a VC. How do I take a call that, this is the right time to exit the company?
That's a very interesting question, because when you want to exit, you will never be able to. Yeah. Because when you get a telltale sign about the company is possibly not going in the growth trajectory that you want to, right? It becomes difficult to exit. You have to understand there's a lot of risk in VC / private equity. It's private investments. That means it's not liquid. You can't easily sell it in the market. You have to wait for some opportunities. Now, what are those opportunities? One is you can ask the founder to help offload your shares, right? So they will then talk to other investors saying, Harsh wants to exit. Do you want to buy his stake? They will orchestrate that. That's possible. I'm not saying it. But if times are tough, I think that channel stops.
Okay,
Second, what you can do is you can sell the stake if you find an investor. But in all of your agreements, they won't allow you to do that. You need a founder approval. There's a lot of kind of documentation which goes in, right? So that becomes tricky. So the right time to exit is whenever there is a funding round which is happening. Now, rounds are, you start from seed, series A, B, C, and so on. So let's say आपने seed stage में invest किया. उस समय, let's take the example of Zomato. 10 crore की valuation थी. You invested 1 CR, right? So you get 10% of the company. Now, when series B happened for Zomato, let's say the valuation at that time was 500 crores. So your 1 crore is now worth approximately 50. There will be a bit of dilution, approximately worth 50 crores. That's a good time for you to exit. The founders can help you offload your stake and raise some additional money. Now, when do you know whether that's the right time? I think you need to have a benchmark. I need a 5-year exposure. Uske baad, I want to take my initial investments out and maybe ride the upside, right? If you keep your money invested much longer, let's say 10 years, I'm not saying nahi, that's not a possibility. There are bits where I have been invested for 8 years now, right? But it runs a risk of very quickly losing that money because you never know. You can end up, I don't want to take that, but you can end up in a Baiju situation where your valuation ran up and very quickly almost became zero. You don't want to end up in that situation as well. But there's nothing you can do about it, right? So you will have to take that stake. My suggestion would be the moment, if you are at seed stage, the moment you get series B or C, that's a good time to reduce your stake in the business.
Okay.
Yeah.
Because usually the downturn takes, is actually at a much higher pace, right? Like the Baiju's thing, it took so long to actually reach that stage.
Yes.
But jab wo downfall hoya, it just happened in
almost immediately.
Yeah.
And that pretty much the most kind of celebrated edtech company globally, right? It almost went down. So you will that's the risk you're running, right? इसी में मैं एक बात बताऊंगा कि if you're investing directly, एक या दो investment कभी मत करना, right? Because your hit rate cannot be that high. I wish everyone well, but the general thumb rule is अगर आप 20 investment करते हो, 5 will go defunct. 10 will return your money. 2 or 1 will be blockbuster, which will be 200x.
Okay.
Yeah. So but you need to invest in 20 to get one blockbuster. If you invest in 1 and you expect that to be blockbuster, I wish you well, but generally वो नहीं होता, right? So individual investing कर रहे हो, तो please make sure you do it only through a fund. But if you have appetite for 20 is when I want anyone to kind of go ahead and kind of do that investments sitting on the cap table, right? Otherwise, you run the risk of losing money a lot faster. Yeah.
Okay. So say suppose someone wants to start investing in startups, maybe as an angel or a VC. What is the right amount of money that they need to start? Say you are saying कि एक दो में मत करो and you should have at least 20 companies.
Correct.
So how much money do you approximately think people should aim for before they think about venturing into this?
So in India, right, US, the scheme is very different, but let's fix to India. India, they are usually minimum check size for anyone who wants to invest is 1 to 2 lakh rupees, right? And you can do that very easily on platforms called Angel List, where there are syndicates. And मैं syndicate explain करूँगा, but where there are syndicates which will accept your 2 lakh rupees. So now you need to have a pool of approximately 20 to 40 lakhs before you start investing that too. आपको ये सोच के रखना है कि आपको 20 lakhs invest करना है. If you can't, don't enter, right? Just because you have 2 lakh money in your bank account, you go ahead and invest in one, you're just punting or gambling your money out, right? So 20 lakhs the minimum hona chahiye. Now bigger scheme of portfolio, if you don't have a portfolio of 1 CR, right? That's when 20 lakh matters in private equity or private companies, right? If you have a portfolio of 20 lakhs or pura ka pura, if you put it in private, there's a lot of risk you're taking. So general thumb rule, if your portfolio is 100, 20 should be private. And if 20 is private, 1 should go in one company. That's how the breakdown, I would say, should happen. But again, everyone can change that, right?
Yeah, but it's simple enough to
Yeah.
follow.
Yeah.
And say you were mentioning that you are investing as an LP.
Correct.
Yeah.
Yeah.
So what does it mean?
Yeah. So एक route हो गया where you're investing directly. The other route is you go through one of the bigger funds, which is raising money, and they are investing in 25, 30 startups. Now, you don't get access to those deals. They get access to better deals. So, आप उनके साथ invest कर सकते हो. Now, how does the structure work? In India, there are these companies, let's say Blooms or India Quotient or K Capital, right? All of them, what they do is they raise funds. They are called GPs, which is called general partners.
General partners, yeah.
The role of a general partner is to run the fund. They will put some money of their own, but they don't invest as much, right? So they create a fund, let's say 100 crores ka. And what they would do is they will go to different individuals who will invest in that fund. Those individuals are called LPs, limited partners. Why limited? Because आपका कोई role नहीं है. Investment mein, all you're doing is giving the money, and they are the one who are selecting and running the show for you. You would like that because maybe you don't have expertise or the time to do it, or the ones who work in banks, they're not allowed to do direct investments. So for them, it's easy to give the money to one of them and they go ahead and invest. Now, that's an LP investment. Now, for that, India has a specific rule that your minimum corpus has to be 1.25 CR, right? So if that does not happen, AIF, which is alternate investment funds, they don't allow smaller retail investors to participate in that. And that is for their advantage because if you don't know the risk, you pretty much take a bigger bet, and that almost dilutes the entire understanding of this investment. So you tend to limit it to those. If you have 1.25 CR, hopefully you are a bit better informed than someone who has a smaller corpus, right?
So you're talking about 1.25 for AIFs.
Yes.
Is it 1 CR in India?
Is it 1 or 1.25?
It's 1 CR.
1 CR. Okay. Okay. Because it was 100,000. I thought it was 1 or 1.25. It might be 1. Okay. Yeah.
If you are investing in AIFs, do you think the exit is easier for people?
It's the same.
It's the same.
Usually what happens is AIF mein you make a commitment. So let's say आपको 1 crore का commitment देना है. So you will have to pay that money over 4 years, right? You don't have to pay that upfront. So what's called is commitment of 1 CR, and they draw down 25 lakhs every year for the next 4 years because they invest in the first 5 years and they start exiting from year 6 or onwards. So आप जो invest कर रहे हो, first 5 years में you don't get any capital back. You start getting returns from 7 till 10. Generally, that's when you get it. So it's that long-term investment that you have. But exit is done by the GP. You don't do anything around it.
Yeah, and it's a much easier way for someone who doesn't want to get
Yes.
into what is the valuation, what is the company doing, and all of that.
Exactly. Now, even when I invest, if I have to say, my size is much smaller, obviously, than all of these, right? So I don't define the valuation. The valuation is defined by Bloom's or India Quotient or Sequoia. I'm just a co-investor with them. I tag along with their valuation. Yeah. My size is not that to kind of define valuation. Right.
We spoke about VCs entering and, you can invest in their funds. So how do VCs reach, or calculate the valuation of startups? How do they reach that figure?
It's interesting math, right?
Okay.
So the math works like this. For you as a company, what money do you need to get to the next growth stage? Let's say you decide I need 20 crores, right? Now the math works 20 crores, at typically every round 20% dilution hoga. So your valuation works 20 crores, 20% is what you need. So your company gets valued at 100 CR.
Okay.
Yeah. Now you need to justify that. And there could be other metrics to it. Does it get justified at that metrics or not? So our 100 CR hai, you calculate your EV to revenue multiples and so on and so forth. But eventually math works as simple as this. What's the capital required? How much dilution? Work backwards. That's what your number is. If it gets obnoxious, is when you start reworking, do you really want 20% or can you dilute 25? So there are companies who dilute 35% in any round.
Okay.
That is just to meet that math really well. Right? Capital आप बताओ, percentage मैं बताऊंगा, eventually valuation वैसे निकल जाएगा.
Okay.
Yeah.
When we were talking about, judging startups and their valuation, we discussed about TAM. So what do you mean by TAM and, how does one understand that?
TAM, as it says, is total addressable market. So let's take an example. Netflix. Yeah. What is Netflix ka total market in India? Yeah. How do you estimate that? Right? So various ways to do it. Very simply, what you can do is you can start off from as simple as a top-down approach. What's the population? Yeah. India has 1.3 billion, which is 130 crores. Family size of 4.
Okay.
On an average, the maximum number of households Netflix can enter, agar password sharing nahi ho to, number of users we can enter is close to 30-35 crores.
Okay. Yeah.
Right? So that is the maximum number of users Netflix can get in India. ठीक है? अब उसमें what you want to see is the content, which will be, they are charging us 500 rupees on a per month basis, which is 6,000 on an annual basis. So we also understand that is a big population which might not be able to afford that. So from that, you will create an affordability cut, and generally only 20% will be able to afford that. So the maximum number of users Netflix can have in India is 6 crores.
Okay.
6 crores multiplied by 6,000, that's your overall TAM. But that's not just for Netflix. वो Netflix के लिए भी है, वो Disney के लिए भी है, वो Jio के लिए भी है, right? For all of them. Netflix will only have a smaller percentage share out of it, maybe 15, maybe 20. Very rarely Netflix will get 100% share. In US, it is 100%.
What do you say?
Yeah. So in US, Netflix has 80 million subscribers and population is 360 million. Do the math. That is, they've reached, they capped the number of users in US. Obviously in India, mein abhi wo nahi hua hai, right? That's it. That's a very logical way of thinking. What can I sell my entire product? Maximum revenues kitne ho sakte hain? That's how you kind of estimate TAM.
Like you mentioned that Netflix has that much market share in the US. So does it not have competitive players in the market? Like
it does, but it also has to play with how the content. I think content is very US specific. We are making regional content in India as well, but there's a lot of scope in terms of content there. Plus there are local players as well. But I think Netflix, almost it is a US company which started, everyone has that Netflix account. That's a very easy access. Plus the moment the subscription starts, it's very difficult for many to stop that subscription.
That is true.
Right?
Yeah.
आज के दिन मैं ये सोचता हूँ, it was better off कि घर पे केबल होता, ये अलग-अलग चीज नहीं होती. This cord cutting has really increased bills rather than reduced bills. But Netflix is losing market share now because Hulu is coming in, Disney started as well, right? 4-5 years back, Disney started. So everyone is having some OTT. Netflix was the only OTT earlier. That's why they grabbed the most market share.
First mover advantage.
So they're bound to lose number of shares or number of users in US. But India may gain karenge. That's why their focus is India right now. Because they're done with the mature market. They want to come in. But that's TAM for us. How you might want to think about. Ki mera maximum revenues kya ho sakta hai. Now, from there, you can start thinking about valuation.
Okay.
Ki, kaise you can value your companies and so on.
What are the metrics for judging a valuation? Like, what are the key parameters that you look at?
So, public company agar hogi, to apne, we might have heard price to earnings or EV to EBITDA, which is based on profitability. Early stage startups, mainly they go on a revenue multiple. Whatever is your revenues, a certain multiple of that, right? So revenue multiple, you can pick it up from any public company. So agar consumer space hai and revenue is 3 times, or your valuation is 3 times revenues, done, right? You know it's 3 times is the valuation. Ab aapka jo bhi TAM hai, usme aapka jo bhi market share hai, let's say that comes up to 100 crores, your valuation should be 300 crores. But not today. Your valuation is 300 crores after 5 years. Because you will grab that much share after 5 years. All you have to do is, from today till wahan, jaane ka risk kitna hai? Your time risk, discounted by that percentage. Generally, at our stage, we discount it by 30%.
Okay.
Agar meko 30% year on year return nahi mil raha hai, this is a bad investment for me.
Okay.
So 300 crores after 5 years, discounted by 30%. 70, 80 crores is the valuation today. That's how you justify that, right?
Okay.
Yeah.
And say somebody is at a seed or pre-seed stage, they don't have any revenue to show, right?
So many times what can happen is, एक minimalistic valuation 5 या 10 crore का हो जाता है. Or many times at that stage, it can be I'm missing the term. Give me a minute. It can be a non-priced round.
Non-priced.
What does that mean? I'm giving you 1 CR. The valuation is not yet set. When the next valuation gets set, jahan revenue visibility milegi, usse 20% discount mein I'll allocate shares to you.
Okay.
Right? So it's not a price round because I don't know how to price it. Right? So we can do a non-priced round which comes at a discount to the next round where pricing can happen because then you have visibility of revenues. many times वो भी होता है, right? Non-priced. Yeah.
So, do you think it is prudent for startup founders to raise money at a pre-seed or seed round?
They have to, no? नहीं तो how do you fund the product creation? More often than not, they reach out to family and friends. That's the first line of attack for them. And even if they raise it, either they'll not price it or they price it at 5-10 CR and kind of raise that initial 40-50 lakh rupees, right? Just to get started. And then you kind of offshoot from there at a higher valuation.
Okay. And the discount rate that you mentioned, that 30%, 20%, do you think it gets lowered once the company is mature?
Yes, definitely. No. So, agar at seed stage hai, so we will possibly apply a 40% discount because there's more risk, right? At private equity stage, it's only 15% because now the product is fit. The market is almost established. All I need money is to go ahead and expand into different regions, right? So at that time, 15-20% is a good expectation in terms of returns. So it's what you call as IRR. So at the private equity stage, your IRR is usually 15-20%. At the VC stage, if you're not making 25-30% IRR, you're taking the risk, you're not being rewarded. Yeah.
Makes sense. We were discussing about founders diluting their stake for VCs and angel investors. So, is there a benchmark कि इतना percentage equity founder को अपने पास रखना चाहिए?
Generally, we want founders to have stake in the business because if they don't, then unka and investor ka interest is not aligned. But at the same time, founders also understand if they are raising new rounds of funding, unka stake will get diluted. For example, Dipinder Goyal of Zomato, when he had his stake earlier, it was 100% when the firm got started. And in 2021, when it got listed, his stake was only 5.6 or 6% stake. So it got diluted massively. अब ये क्यों होता है, right? Various reasons. Let's see what happens in terms of each round of funding में क्या math work करता है. So let's assume I'm a founder who has 100 shares when I founded my company and I need to raise new money. Thumb rule is whenever you raise new money, right, it's usually at a 20% share dilution. ठीक है, तो मेरे पास, my firm has 100 shares. I need to issue 20 new shares to new investors. So my existing investor, which includes the founder, 100 out of 120, that almost becomes 85-86%, right? Yeah. So they have got diluted. Number of shares kam nahi hua, but percentage in the company kam ho gaya. Yeah. And then if you go further up, it keeps getting diluted in similar counts going forward. So dilution hona hi hai, right? There is a saying that the company should move forward, not the founder. Obviously, we are betting on the founder, but eventually, founder also wants his idea to move forward, right? So they are okay to get diluted because it's better off for Dipinder Goyal to have 6% of a 2 lakh crore company versus 100% of a 10 crore company. So they're growing the company size. They're growing the pie bigger. So that's how they are getting rewarded. At the same time, if they get diluted massively, investors give them what's called an ESOP pool, employee stock options pool. So agar founder ka stake falls dramatically, investors understand that. We will make sure we reward the founder with certain stake, right? But obviously that has to be aligned to business kind of milestones, that has to be aligned with business criteria. But we prefer to give founders stake. We don't want them to be lying with nothing at the end. After all, it's their idea. They are the one who's running the company, not us. Yeah.
And as you mentioned earlier, you are investing in the people, right? You meet the founders and it is their vision of the company which you are investing in.
Absolutely. Right? It's so they, right? Wherever we have seen historically, right? They have to take the story forward. We as investors cannot run the company. That's not our expertise. Our expertise is to help the founders, but very rarely we know how to run the company inside out. That's not my, as Namita says, ye meri expertise
It is
nahi
nahi.
hai.
Yeah.
Yeah.
So, do you think that the decision making gets hampered if there's dilution in stake?
It does, but there are various ways to manage that. Founders do it. What happens is their stake remains low, but their voting power can be higher. So you can have different classes of shares. So where founders can have a say. The moment founder doesn't have a say and investors run the show, you saw what happened with Bharat Pay. Yeah. You don't want that sort of situation, right? It's not good for the founder. It's not good for the investors as well, right? So you can have differentiated voting rights on number of shares if you want to, and maintain your control, but dilute your stake.
Okay,
So it's best of both worlds.
Voting rights and valuation, equity stake is completely different.
You can have very complete different bits, right?
Okay. So what do you look for in a founder?
I think one is humility, right? I want the founder to be as humble to be running the show. Invested, like I said. I am a big, and maybe from the background which I come in, I'm a big fan of someone who has the right education, because what that does is it creates a mindset that you can pivot out. No business is the same what they had started from. Tell me one founding company which is today successful, which is following the same path that they did 10 years back. There's no company which would be there. For that, you need to pivot. And for pivot, there's massive change management that's required. For that, you need to have the appetite and possibly the vision to do it. That's where I think education really helps. Helps you kind of get the right path. At least you have different frameworks in mind. But to be fair, India has blown me on the other way, right? Where they are such rural rooted companies, right? Their simple business logic has made some massive 100, 200 crore businesses, which educated ones have not also been done. But I tend to lean towards more educated people who come in, right?
And makes sense. Like upskilling always helps. I feel.
Always helps at that time.
And like I was listening to this interview of Axel Partners. So they mentioned that they try and look for companies which have founders who don't come from affluent backgrounds. Okay.
That's one for sure, because they don't have a risk to fail, right?
Yeah, because they said that affluent people don't have the hunger to
grow. That definitely is there, but but also on the flip side, the one who comes from affluent ones, possibly for them, money doesn't matter. The vision matters. Right?
They come with a purpose.
And their bit is to create something which takes their legacy forward. And two of my portfolio companies, they are coming from affluent backgrounds, but they've done well, right? Touch wood. That's because they wanted to create a legacy for themselves. So that's not a bad idea also. The ones who comes in from affluent ones, but yes, the ones who are more not from an affluent background, they're needy. And at that time, they would do anything to succeed. And that's the hunger you need in a founder.
And they don't have the option of exiting.
Exactly. They don't have a plan B. The moment you don't have a plan B, they stick to plan A, and they make sure they will make money, and the investors will also make money out of that exit. So, yeah.
Say if I get a VC into the picture, what do they bring to the table at that point?
Money. Obviously. But today's day and age, money is not a problem. I think everyone has excess cash to be deployed. So I think what we possibly would be heading is, how does founder select who they want to interact with, right? So if I am a VC A versus VC B, who should I select versus an angel? Aaj ke din HNI ke paas bhi 5-7 CR of money to be invested in a private company. I think it's easy to find that. Right? But why will a founder not select an HNI versus go to a VC? because VCs are partners in this. Like, again, the ones I work with, I'm on a cap table where there are many other VC players. So they don't just invest money, they'll sit with you on a monthly basis, understanding your strategy, what are your pain points, how can we help you in terms of hiring, connecting you to competitors, connecting you to other players in the market, and then also help you raise further funds.
Understood.
So, let's say, for example, Bloom's Ventures, one of the bigger VC players in India, what they would do is they will help the founders meet bigger players, let's say sovereign wealth funds in Abu Dhabi called Adia or Mubadala, right? Introduction karenge, they can go in and raise the bigger rounds from there. So there is so much more partnership that gets established rather than just money, right? Money is just one part of it, right? We need direction, we need help. Hiring is the biggest issue. People. Many VC players have their internal team who actually help each founder company hire the right talent, right?
Makes sense.
Even for me, when I get in, I help them in hiring, right? So if they have a requirement of hiring a CFO, hiring the sales team, you build your own network and you help them expand the team. That's what you get onto the table. It's not only money. Yeah.
So you basically come on as a equal stakeholder for the risk, and you help build the company.
Exactly.
You spoke about choosing. How does a founder choose the right person who they want to associate with? So we've seen that live on Shark Tank, right? That they see 4 sharks sitting and they have to choose. So firstly, I want to understand, who are these sharks? They are angels, they are VCs, they are private equity. What kind of stake do they get?
Most of them are at the VCs. If I have to classify, they would be at the VC stage, right? They don't write private equity checks generally, right? So the best part about Shark, first, it's too glamorized. It's nice, right? It's got investing as mainstream, but most of them have run their own companies. They've faced all the issues through the cycles of business. So they understand the pain point. And the usual stake जो आपने Shark Tank में भी देखा होगा, they usually get 4-5% stake. I think the Kunal Behel, in the recent one, he usually loves a bigger stake. But others are good with maximum 4 or 5% stake, right? That's a typical angel/VC who the sharks are there. But again, you are interacting with them not for the money, because if it's a Piyush who has founded Lenskart, who has taken funding from one of the biggest sovereigns and financial institutions in the world, if he gives them a call, they'll open up the doors for you to at least listen. Now, your product could be rubbish, but at least they will listen to you once. That's what the sharks are for, right? So they get the network with them.
So suppose a VC is trying to invest in your company. So how do you ensure that it's not in conflict with any other company that they have in their portfolio?
It's difficult. So I remember this was about college applications, right? And I had 2 companies who had reached out so from India, there are many who apply to colleges globally, right? And that application process itself is a tedious task. How to build your SOP, how to build your story, which colleges should you apply, what sort of loan, and so on. So there are 2 companies who had come in to me because of my network, right? Now, obviously, I was invested in one, and the other I was still trying to talk about it. So from an investor's viewpoint, I think it was my responsibility to disclose that there's no conflict, but I'm invested in one of their competitors, right? So they should ask. Founder always gets scared asking the investor, do you have any conflict? I think investors like that if you ask them upfront, is there any conflict of interest, right? So you can address it upfront versus waiting to find it out at a later stage, right? And if there is conflict, right, I have had founders who have walked away, and that's okay for me. I actually respected the founder more at that point in time rather than
Taking it too hard.
Yeah, you should do that, right? Because if it's your business, you would do the same thing. Have I invested in conflicting businesses? Yes, right? But it becomes a challenge because you have data points of two competitors.
Okay.
And that might be something which would be riskier. There are known people who might possibly try to shut one down or merge them together to their advantage. Now, VCs do that. They have two companies, both almost in competitive space, but they try to merge them together, right? Facebook did that when they tried buying WhatsApp. They tried to kill competition, right? So that's a possibility. You need to be very aware, are you okay to merge or not, right? That's why asking the VC directly is not a bad idea.
Do you think the VC would be honest upfront?
Indian VCs, maybe not. Wow. Globally, there is a bit of trust which has got built in. And that's, again, how do I say this? Corporate governance is a bit of an issue for us in India, right? It's a known fact. It's a known fact. So I would... but it's getting more and more better. It's getting more professional for us here. Yeah.
Okay. So it's like taking a bet.
It is. You cannot, even if you sign an NDA, it can easily be kind of, very easily, right, for us.
Let's talk about that in the year 2024, India has raised around $12 billion, right? So do you think there's a funding bubble right now in the country?
In a way, there's a funding slowdown, which we are seeing in the last 2 or 3 years. Obviously, when we see year-over-year growth, it's showing growth, but it has been a bit of a funding slowdown because of the boom which came post-COVID. So post-COVID, 21, 22, there was massive money flowing into VC space. Then it paused for those 2 years, right? These were the years where actually investors got tested, right? There's a concept in valuation which is called a down round. There were many companies which did a down round. Down round का मतलब क्या होता है? Last round मेरी company की valuation आई, let's say 100 crore, right? Now my company is not able to sustain this business at 100 crore valuation. I need to raise new money. Investors are not ready to give me 100 crore valuation. So the next round, जब मैंने पैसे raise किए, it might be at a 60 crore valuation. That's called a down round. Obviously, we don't like that, but we have to accept it and move forward in this, because do you want the company to go down to zero or better off have a down round? Last 2 years, there are so many companies which have had a down round rather than an up round in this scenario. So the funding is flowing in, but now investors are becoming more picky. Right? You want to see some sort of performance. You're not just running after market grab or market share, which in 21, 22 yahi ho raha tha. People were throwing money to grab market share. That has slowed down. Now everyone wants to build a sustainable cash flow generating business, which is the right way to go, I think. Right? So, but it's exciting times. Government is supporting this. So I don't know if you know this, but in the current budget, government allocated 10,000 crores to something called a fund of fund.
Yes, to the fund of fund for startups.
For startups. Yeah. They first did that in 2016, approximately. That's a brilliant way because it's supporting homegrown VC funds. So any of these VC funds, their biggest anchor investor क्या होता है? The one who comes in with the first check.
Okay.
So, agar pata chala ki government is putting that money and one or two other bigger names putting in, confidence in that fund goes up.
All of massively.
Them, yes, all of them have anchor investors who are government entities, right? Which is helping with this new allocation. I think it is only going to multiply even further. I think last round, when 10,000 crores was funded by the government, the AIFs, which was India-based, they raised 91,000 crores.
My God.
So with 9x. This new funding, you understand the amount of confidence that's going to come in. So it's good times for the entire startup ecosystem, I think, in the next 10 years because of this new kind of push that the government has also shown, right?
Nice. Because government till now had only built funds for directly giving it to the founders with Startup India and other schemes. I didn't know that it had happened back in 2016 that they had put in money in
It was
VC.
this is called
Huh.
fund of funds.
Fund, huh.
So where government creates a fund which is investing in one of these
VC fund, AIFs.
AIFs
Huh.
who are then again. So there was a fund of 10,000 crores last time, and again got created. They
Okay.
expanded the size by additional 10K now.
Nice.
Yeah.
Tell us a little bit about the startup areas or sectors that you think that people can look out for.
Wow. Okay.
Yeah.
Everything in India.
Everything.
But all I would say is whenever you are, so I think how should you evaluate which startup industry possibly should work, right? I personally am very wary where there is too many players in the market.
Okay.
Because if there's too many players in the market, when Uber started with Ola over here, with Lyft in US and so on, all we were doing was we were throwing money to get customers on board. It has what's called massive cash burn initially. So abhi jaise Blinkit hai, or Swiggy ho gaya, Zepto ho gaya, and then there's something which started with Aditya Birla, Jiffy as well. It's a very crowded market at the moment, right? I'm not saying you won't make money, but that will be a massive cash burn initially. I tend to stay away from businesses which are massive cash burns, right? Something which has more sustainable growth. So depends on where that might be. I think food and beverage industry is something where there's enough growth. Agri, which I love doing. EdTech, I know we have been burnt in the last 2 years, but I think EdTech has a lot more story to play in India. Given the size we have, I don't think so Byju's and an academy was a wrong bet. It just didn't play the right path. That's all. But it is required. India cannot just work on offline. It has to have a massive blend of online. There has to be a blend rather than just online or just offline. So I think EdTech would be the next story, hopefully in few years for us.
It would be a revival of it.
Yes, it has to, given how much upskilling we need to do in India. And maybe मैं EdTech से ज़्यादा attached भी हूँ because of my profession, right? Because I think India has the biggest potential in that market for us. Healthcare will be something which will be good to take. Health tech, because आजकल अपने prescriptions हुए या reports हुए, there's nothing synced up, right? When you go to a doctor, he does not have any of your history. That's massive revolution. Them players who are playing in that field, which you want कि आप doctor के पास जाएं, अपना एक token दे, they know everything about you right away.
Yeah, which happens in other countries.
Sadly, it's starting. US is the most backward in that country. I literally have to take fax copies of my kid to my doctors to kind of give them history. But that's something which I think it has regulatory hassles, but there's a lot of investment which is going in health, edtech, consumers, right? That's the one. Fintech is overblown. I think it has reached a stage where it's now become mainstream now. Right. So that's my take on industries at the moment.
The fintech, the only upside is that it gives you revenue right from the start.
They burn. They give you revenues, but they burn initially because for anyone to switch banks, right, or switch services, you have to entice them with massive cashbacks, massive money, and that's burn.
Yeah,
right? And आप नया क्या ला रहे हो उस fintech में, that's important for them to switch, right? You can't really play on interest, you can't really play on products, you're only playing on convenience. And convenience is so much intangible. How do you put a value to that, right?
Yeah, there's no limit to it.
Convenient, right? Yeah. So that's where I think fintech is overblown. It has found its space. There might be some players which might come up, but everyone is tapping into fintech space now.
Yeah, makes sense. So, are there any red flags that that tell you that this startup or this company is like not a good investment?
Many.
Yeah.
Like for me, my biggest red flag is someone comes and says, we are the next Uber in this industry. I'm the next Netflix of this. Get it? You're trying to position yourself. But I want the founder, whoever comes up, they need to give you a right vision of the TAM. Right? TAM, कुछ भी बड़ा size बोलने से TAM नहीं बनता. You have to see how, have you thought about the market? Rather than you've just picked up one McKinsey or a Bain report and you're just coming to blur it out. So how they define TAM becomes important. Second, how passionate they are about the company. Whenever a founder comes in at the seed stage and talking to me about exit, I'm not sure whether I want to invest with them, right? Because I want the founder to be invested in the long run. It's a 5-10 year game. No one knows where the exit will be, right? If anyone says my exit strategy is someone else acquires me, not a bad idea, but that's a red flag for me because I don't want that to be a success metrics. Sustainable business should be more of a success metrics, right? So anyone plays valuation in your pitches, that's a red flag. Anyone wants to just position themselves differently, that's a red flag. And no, anyone who does not have a successful team with them, they need to build a team. Founder is great, but they need a professional team. So you need to always evaluate what sort of team are they coming with. If it's just one founder led and no support team which is running it, this is a big flag because once you get to scale, you can't manage all of it. You will need to delegate, right? So if they don't have delegation kind of intent, that becomes tricky. So again, everything is very soft. I wish I had a hard number ki ye percentage se niche hai to mat karo, right? But it's all soft factors which play a big role.
Yeah, because initially at the idea stage, you don't have
any of these.
Yeah.
Any of these. So when all of my investment which I've done, my initial was we have, they coin a term which is called ARR.
Yeah.
Annual run rate.
Yeah.
So agar aaj we do a sale of 1 lakh, right? They'll just multiply it by 365 and they say we have annual run rate of 365 lakhs or 3.65 crores. That means nothing.
Yeah, like no business has a linear.
Exactly. So that ARR, MRR, all of those are great. Only after a certain point in time, initial stage, metrics doesn't count. It's all you're counting on people and team, right?
Okay.
That's the idea.
So tell us about any one proposal that you rejected and what was the reason behind it?
There's a very nice one. This was 22, 23. So one of the companies came in and decent business model. But when I asked them about the valuation, they had been previously funded from 2 sharks on Shark Tank India. Yeah. And at that time, the valuation was, let's say, X, right? Okay. And they came to me and said, we want our current valuation in 3 months of that funding was 3x.
Yeah.
ठीक है, sales बढ़ गया होगा after Shark Tank marketing. Shark Tank is brilliant for marketing perspective, right? Sales हो गया होगा, कुछ हो गया.
You become very popular.
When I saw that, nothing of that happened because it was a more B2B business. So nothing of sales had gone up. But the only way of them justifying is because we had got funding from Shark Tank. Isliye our valuation has gone 3x. I'm not too sure if that's an investment proposal. You should talk to investors on the first meeting as such. So मैंने उनसे पूछा कि क्या किया आपने from that funding till now? What changes have they done? Right? And the answer was we hired a CTO. Yeah. So that CTO was very costly for me. And I could not pay that CTO that salary. And I rejected that investment proposal.
Wow. So before we wrap this up, do you have something to say to our viewers who may be budding startup investors or, already doing it, but they need to know better? Any tips?
Sure. I would say 3 things that you should possibly think about. 1, this is a game of patience, right? So don't invest in startup today expecting to exit in 2 years' time. that's not going to happen. So it's a 8 to 10 year horizon. Sometimes it could be longer as well. So have that much patience that you are okay to invest that money in. Second, right, don't expect all of your bets to be successful, right? That was too much pressure on yourself. Accept your failures and move on, right? You will fail in some investments, you will succeed in some, right? And third, obviously, it's about making returns, but I think it's also to do with uh, are you buying into the product idea? You should be buying into the product idea. You should be passionate about the outcome, right? That's when I think you will make the right decisions. If it's just a pure play financial decision, I have made mistakes around pure play I've made mistakes around pure play financial decisions, right? So be passionate about the output. Hopefully that will help.
That was actually very sound advice. So thank you so much. And finally, we have a small token of appreciation for you.
Thank you so much.
Thank you for taking all the time.
Thank you.
And I hope you like what is in there.
Yes, thank you. It's a pleasure to be here.
Yeah.